Good morning, good afternoon, good evening. Michael Zuber, one rental at a time. If you didn't watch episode 2 from our discussion with Mr. Greg Dickerson and watch the passion this young man had, you missed out. Go back and watch that one. Greg, that was fun to watch your passion in that video. Thank you very much.
Thank you. Yeah, the one thing I can't stand in this world is a bully, and man, I'm having a hard time sitting here and just not getting over there and getting involved. But like I said, I've got kids and a family and things here that I have to take care of. But at some point, I have life insurance, so I may have to just go.
Just book a ticket to Poland and then get over there. Yeah, I saw that 20,000 people have I don't know what it called, signed up or volunteered or whatever the right word is, and it's growing all the time for the what's it called, the Legion or something?
International Legion.
Legion, yeah, very, very.
And
cool.
They're volunteers; they're not getting paid. They got to bring their own equipment, and that just goes to show you, it's the world's coming together. And we talked about that in the last episode, but it's just awesome to see.
Yeah, absolutely. We're not going to go back and revisit that. You need to watch episode 2 because I felt it where I am sitting and I'm on the other side of the country. Greg, what I want to talk about in this episode is kind of the bigger picture. I think, unfortunately, the best case scenario is we run into a couple years of stagflation. The other outcome is a nasty recession. I just don't see any way around this. I think the Fed is late. I think they've been weak. I think they've missed several exit ramps to fix this thing. They've got no room. And this war has certainly not made the job easier, but I could see very much a repeat of 74, 75 after the oil shock. I was pretty young then, but it was not a good time. And I think stagflation I think we might actually be in it right now, but it's certainly, if we're not in it, it's staring us right in the face. What do you think?
Well, that's an interesting contemplation because, what's the definition of stagflation, right? High interest rates and low growth.
Well, it's not interest rates, it's inflation, high inflation.
Well, inflation, I mean, high inflation, low growth. I said interest rates, my bad.
No, but, right. I know what you meant.
Yeah. High inflation, low growth is stagflation. We've got a very different thing going on. We've got high inflation. It's going to get higher, but the economy's kind of humming. I mean,
agreed. Yeah. Right now,
we don't have slowing growth. We don't have low growth. We have more demand. We have more jobs than there are people willing to work. So it's very interesting that we do not have declining demand or demand destruction yet.
Yes.
So I don't think we've entered stagflation. We've had forced shutdowns, but as soon as we've been able to open up, people have shown they're coming right back out.
Yeah, absolutely.
And there's record bookings for travel for spring break this year. There's record, bookings for summer travel. I mean, people have saved money. They're ready to get out and spend it. They're ready to keep stimulating the economy. And, globally, I mean, the economy is still humming along pretty good, even considering what's going on. I mean, obviously, Russia's economy is not doing well. And, we're going to have issues from that, but it's mostly inflationary, which will drive demand down eventually. And when the Fed reacts and they push rates up, that's going to, reduce people's ability to borrow and spend. So that's going to affect things. So I don't think we're there yet. I think if the Fed comes out the way they need to come out against inflation, that will start demand destruction slowly, but it's going to take some time. I don't think you're going to see this happen overnight.
No, I think you're absolutely right. Yeah, we're not right now. We have high inflation, decent growth. I mean, I think Q4 was 5.6-ish. They're calling for 3.5 or 3.8 in Q1. So you're absolutely right. And I did see those numbers. I think there's actually an economist I'm still trying to book who thinks that unemployment is going to go to 2%. And it's all going to be the service sector, right? We've already bought all the stuff over the last 2 years, but now the service sector is going to be hiring, which will drive up wage inflation and really kick off that wage spiral, which means that inflation becomes very, very sticky. So again, it is inflation is demand destruction. Rising rate is demand destruction. And I do think there's going to be kind of a joining of the minds, and it just compounds, because I already see some demand destruction. I have tenants that are already telling us that they're having to make choices, right?
We're seeing it. The other day I saw something, it was CNBC or something, where people in Florida were moving because their rents had gone up so much in their apartments. They were moving to a different area, where they were. That. Some of them were leaving their jobs. They're like, look, I have to quit my job and move. I can't afford to live here. So, that's the other area that people need to be careful, because a lot of business models are built around, and perpetually increasing rates, exponentially increasing rental rates. And when these other areas come under pressure, it's going to reflect back on rent, because people just, they can only spend so much of their income on housing. So that's going to affect a lot of different things. Good news is interest rates are still low right now. So, people can refinance, they can pay down credit and do all those things in anticipation of what's getting ready to happen. And if anybody's watching, you have high interest debt, you better go refinance that right now if you can. And, if you can get into a house, look for the new home builders, because they're going to be the first ones that'll be able to dump inventory quickly, when things change and rates rise and things like that. But yeah, people are changing behavior, and the gas pump's going to do it right away, especially people that are paycheck to paycheck, week to week. You start getting, your area's already been $5. In my area, we've been in the threes, low to mid threes, and now we're over $4 all of a sudden. That's a big deal for somebody who's making 15, $20 an hour.
Yeah, actually, I have the numbers this morning. I wrote them down. California gas, $5.28. LA gas, LA County, $6.99. Hello.
Yeah.
That'll change behavior.
Yeah. Yeah. And it's happening, like I said, already in our area. And, again, people understand a lot of it's temporary, short term, because of what's going on, and are more than willing. I'll pay $10 gas to get rid of this guy. I don't care, to end this conflict. Let's put as much pressure as we can on them to stop. So, but not everybody can do that. And that's understandable. And that is going to change behavior in a lot of different ways. And, that's going to decrease spending, which should arguably slow growth, but it's going to take time. It's not going to happen overnight. It's going to take months of that to reflect and roll out through the economy. But this week's going to be very interesting. A lot of important data coming out this week that's going to measure a lot of these different things we're looking at. But again, those are, backward looking. So, they're not taking into account what's happening right now.
No, I totally agree with you. One of the things that you say that I think needs to be reiterated today, and I actually think about it a lot. This is one of your sayings. I hope I don't butcher it. Good times never last. Bad times never last. I think a lot of folks kind of become emotional, and that's why these blow off top rallies at the top, where you get suckered into paying too much. And also when it turns, people get too negative, right? That whole psychology of an investor. I think right now, without question, we're in a tough time. But as Greg always says, bad times never last. So keep doing the work, keep watching it. Like you said, there are things you could do. You talked about, hey, if you have high interest rate debt, you missed, 3%, but 4% still out there, right? Go take action, right?
Yeah, and rates are adjusting low right now. Treasuries have dropped,
That's
the rates
true.
have dropped.
Yeah.
So, now's a good time, and they may get even lower if this conflict continues to escalate, and we do sanction oil and those types of things. You'll see a flight to Treasury, because we'll see another March type incident in the markets, where markets are limiting down. I mean, if the worst case scenario comes out, there's no ceasefire, Russia's escalating, we're sanctioning oil, those types of things, you're going to see a March 2020 event in the markets.
Yeah, I totally agree. One of the things I'm trying to do is learn technical trading. I have a friend who's been doing it for 20 years. We talk on Sundays. He talked about 4,300 on the S&P being a floor. It got broke this morning. And it's like next support's not till 3,800. Do you watch stuff like that or not really?
Yeah, I look at that, and because the technicals, you have to understand what that is. That a lot of that's algorithmic trading. So things are plugged in, if this, then that.
Yes.
Scenarios, and then retail follows behind it. And then to your point, on the other end, what happens is, like the .com, bubbles and the booms, everybody's getting in, everything's great, buy the dip, and just things peak until they don't, and you reach a peak, and then it deflates and it comes out. And what happens is these people that got burnt here, they can't get back in for a while, till you get to the other side. And crypto, for an example, 70% of the people that got into crypto got in the last year at the top.
Ooh.
Yeah. So, I mean, it should go back up again, but we don't know that it will for sure. And we don't know when and how long it'll stay down. And, the longer it stays down, the more it wears people out, and the lower it goes. And you have these other things, people finally give up, capitulate, sell out. And that's where you get those big dumps in a traditional bull bear market cycle. And then it takes a while for people to either come back in or new people to enter the space that weren't in there.
Yeah.
And we've been in a very unique environment since 2008 and 9, where it's just been buy the dip, buy the dip, buy the dip. And that's what you're seeing with the technicals on a lot of these things. And then when those technical levels get broken, the algorithms kick in and they start selling. retail traders see that, they start selling, alerts go off and limits get hit and things like that. Next thing you know, you get a cascade. So that's why markets move on this news. It's because of these technicals. And then there's the psychological levels too. So, what charts is plotting the price action, which represents the psychological behavior of an investor, retail and otherwise, buying and selling. It's behavior. That's what it's charting. So you have to look at the macro environment and you have to look at the technicals on the chart for the different levels. And the best way to think about this is that, I was in the Navy. So if you're sailing a ship, okay, you're not going to just get in the ship and go out to sea without charts. You're going to look at the charts. You're going to plot and navigate the course. Well, then you're also not going to do that without checking the weather, to see if there's what storms are on the horizon, what the winds look like in the sea and the condition. That's your macroeconomic environment that you have to chart, you have to look at so that you can interpret on the charts what course you need to take. So like a lot of people say, show me the charts and I'll show you the news. Well, that doesn't make sense. If you hop into a ship and say, show me the chart and I'll show you my course, there could be a hurricane out there you're not thinking about if you don't check the weather. You sail right into it, you're done.
Yeah.
When you could go around it,
Exactly.
So that's why you need to look at the macro, the whole fundamentals of the market and the news, and then interpret that in terms of the chart, because that's the psychological behavior of the investors that you're charting. Even the algorithms are programmed by individuals based on emotion.
Absolutely. Yeah. One of the things that I saw, I think it was on thestreet.com. It might've been Fortune. I think it was thestreet.com. The last 3 days of last week, Wall Street unloaded more than they had done in the last year, meaning they were sellers. And of course, the retail buyers were trying to buy the dip at record numbers. So again, the smart money was heading to the exit. Retail was trying to buy, and lo and behold, we broke that support level this morning. So
treasuries are down for a reason, yields, and markets are down for a reason. And when I say deleveraging versus repricing, understand what deleveraging is. So there's a lot of hedge funds, a lot of institutional investors that are borrowing on margin and they're leveraging to buy. Okay, like a Michael Saylor, right? He leveraged his company to buy Bitcoin. Well, at some point, you have to pledge those assets that will get called if prices drop below a certain percentage. So they have to sell. And in the markets, these hedge funds, they get margin calls and they have to deleverage. We've seen the deleveraging because of the margin calling. Now we got to see a repricing, which is reversion to the mean. Where were prices before the big, Fed stimulus after 2020? Where's the mean that we're reverting back to? So that's kind of what's going on.
Yeah. And I'll say it, you can agree or not, but the mean is probably lower than we are today.
Well, the thing about these times, so good times never last, bad times never last.
Exactly.
Markets usually go lower than you think they're going to go, and they usually snap back higher and quicker than you think that they will. So, those are the kind of things you got to watch. So you don't want to catch everything all the time. It's always most important to know the top than it is the bottom.
Yes.
But you don't need the exact top. You need that area where it kind of rounds off, unless, you get that big blow off thing. But it's pretty easy to understand when you're close to the top. And if you can get out in a relative range of 10% of the top and get in at a relative range of 10% of the bottom, then you're okay. And that requires jumping in when everybody's jumping out, at a point when you kind of see it down to those levels, and they're kind of easy to spot.
Yeah, very, very cool. Well, Greg, this has been a wonderful set of conversations. Where can people find you?
Yeah, gregdickerson.com. That's where all my info is. Go check it out.
Thanks, buddy.